Hi traders, and welcome to another video. In this video we will go over the different ways of analyzing the forex market. We can look at the market from multiple different perspectives. Traders often have their own opinion on which analysis is the most important one. However, if you want to become a professional and profitable trader, you should understand how all types of analysis work. Combining them and laying them on top of each other will give you a better overall view of the market. Knowing and applying all types will prevent you from being surprised by market moves that you don't understand. It's all about knowing why the market moves and then finding the best possible entry and exit points. It's not only looking at charts and becoming rich. Well, for some it is, but why not increasing your chances by combining the other aspects? Okay, so we have 4 types of analysis: technical, fundamental, sentiment, and seasonality. Let's go over each one so you understand what they are. Technical analysis is a trading discipline employed to identify trading opportunities on charts. Technical analysts believe that past trading activity and price changes of an asset can be valuable indicators of the asset's future price movements. Technical analysis often combines tools and indicators such as Fibonacci, psychological levels, support and resistance zones, and many more charting techniques. You will learn more about these terms later in the academy. Technical analysis can be done in multiple ways. Every trader will conduct technical analysis differently. Fundamental analysis is analyzing economic and political news that has an impact on the overall health of the economy or global politics. This can go from a change of interest rates to employment, inflation, and so on. Many websites have a calendar of economic data and provide further information. Through identifying the primary drivers of a currency's value, forex participants are able to craft informed trading decisions. Sentimental analysis is all about understanding the feelings of the market participants and how they are positioning themselves in the market. Are their position based on optimism or pessimism? Based on hope or fear? This is where the terms risk on and risk off come in, but more on that later. Seasonality is a more time-based analysis. Here traders look for repeatable patterns in the market. Some cycles tend to repeat themselves every day, week, month, year, and even every decade. The seasonal cycles will only give you the tendency of a particular currency pair to bottom or top at a certain point in time. It's not super exact, but it gives you a certain window in which it can happen. Technical analysis is the study of historical price action to identify patterns and determine probabilities of future movements in the market through the use of technical studies, indicators, and other technical analysis tools. Technical analysis can help you determine not only when and where to enter a market, but equally important, when and where to get out. There are no certainties when it comes to predicting exact price movements. As a result, successful trading is not about being right or wrong. It's about determining probabilities, risk-reward, and taking trades when the odds are in your favor. By technical analysis, we want to increase our chances of success by finding multiple confirmations. Fundamental analysis. A part of determining probabilities involves forecasting market direction. Finding the overall market direction can be done without even looking at a chart. Identifying the overall health of the economy and placing trades based on diverging economies. Selling a currency of a weak contracting country against the currency of a strong expanding country. When we have a sustained fundamental bias, it's like having the wind in your back when you're riding a bike. Sentiment analysis. The market sentiment is a spin-off from fundamental analysis. Whereas fundamentals are more on a mid to long-term time frame, sentiment is more a short-term. Market sentiment means how the investors respond and feel about the market. In summary, it focuses on monitoring their behaviors. By looking at how traders and institutions are positioned, we can see the real sentiment towards the market. When traders and investors are feeling positive about the global economy, they tend to take on more risk, hence the term risk on. And of course, vice versa. When they feel negative about the global economy or uncertain, they tend to reduce that risk, hence the term risk off. Seasonal analysis. In foreign exchange markets, macroeconomic forces can create cycles. Understanding forex seasonality can help forex traders time entry and exits. Farmers also use seasonality. They know when to compose the fields, plant the seeds, when to water and when to harvest. They don't know the exact day, because it will be different every year, but they do know what month or what week. But how do they know that? Based on the seasons. What month is warm, cold, dry, wet? It's the same in trading. An example of seasonality in forex is when the Japanese taxes are due, around March. This is when we can see the yen strengthen, as it's being pulled back to Japan and so demand is high. Or when natural gas prices rise in the winter, because people are cold at home and turn on the heating. Combined analysis. One way of enhancing performance is through combining all types of analysis into a hybrid trading system. Defining directional bias with fundamental and sentimental analysis with the precision of technical analysis, and seasonal timing will yield confidence in your trades. If you specialize in one and only focus on that one, you might become good, but you will have limitations. Master all and you will be great. A pilot has to be good at taking off, flying and landing. If a pilot is excellent at only one and mediocre or even bad at the other two, you can guess what will happen to the plane. As a trader, you should be thorough in all parts of your analysis. And as always guys, thank you for your attention and we'll see you in the next video. Bye.